Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're joined by Ben Rundle from Naos and Chris Stopp from Wilson Asset Management. And we're talking downgrades, and haven't we had a few of those? Is it abnormal? Is it the normal reporting season, confession season, whatever you want to call it? Chris, have we had more than normal?
Don't think so, Matthew. It's come later than usual. Normally April, May is confession season. It really stretched out into June this year, really reflecting the patchiness of the economy. These interest rate cuts that we've had in the last 12 to 18 months are not having anywhere near the impact they've had in previous cycles. So I think the sluggish macroeconomic environment is painting a very challenging picture for all these companies, and thus the negative news flow we're seeing.
And we've had some high-flying stocks like Seek, Flight Centre, disappointed on the earnings front. Does that surprise you?
It has. The thing that hasn't surprised us is the share price reactions, with particularly these high PE stocks and the share price, the large falls that we've seen in some of those high PE stocks like Seek. So really not a great surprise that, and it's not concentrated to any particular sector, it's right across the market that we're seeing these earnings downgrades, which is a little bit of a concern for us.
And Ben, what do? Do we pick over the carcass, or do we let them find their level, or are there more downgrades to come?
Yeah, look, what can be sometimes concerning when a company downgrades is that it's often not the first time they will. They go into a downgrade cycle. That's not always the case, but it certainly can be. And I think Chris is right. Despite what stock prices are telling you and what house prices are telling you being so strong, the underlying economy isn't that great. Wage inflation's not great, job growth's not great. There's a very high level of household debt. And you get these high-flying stocks that a lot of people are only in them because the returns elsewhere are very low in terms of bonds, in terms of term deposits. When there's such a large weight of capital chasing very few stocks, when there is any sort of negative turn or a potential miss, they do really get crunched.
And as we head out of June into July and towards reporting season, do the downgrades disappear and we can concentrate on companies that do hit their earnings?
Yeah, look, I think, by now a lot of the confessions for this year are probably done. I think people will be looking for growth into next year, and the growth we've seen in the market over the last couple of years has been driven by margin expansion and a PE re-rating, and it's getting harder and harder for companies to do that. So I think the stocks that will probably do best are the ones where they have levers to pull, and as I said, a lot of that margin expansion is probably done for the time being. So forward-looking statements will be very, very critical.
And Chris, if we assume that the confession season's gone, and as you said it was late, do you start getting long the market buying stocks because that's past us and we can invest with a fair bit of certainty about the earnings will be okay?
No, I don't think so, Matthew. You wait another 4 or 5 weeks and wait for the earnings reports to start coming through, and you can have some conversations with these companies and try and understand the various strategic direction they want to take their various businesses, understand how they've traded in the last 6 or 12 months. I think from our perspective, we'll sit and wait and assess those opportunities as they come up through that August period.
And do you ever buy a stock that's just downgraded?
We tend not to, Matthew. Our research tells us a stock that has one downgrade, there's a 33% chance that they're going to downgrade for a second or a third time, echoing Ben's points. So we don't tend to like catching falling knives.
Well, there you go. It's been a pretty nasty confession season, but things might be a little bit better in the months ahead.